It feels like the whole financial world is just accelerating, doesn't it? And so much of that seems tied to artificial intelligence.
It really does. AI isn't just on the fringes anymore.
No, it's everywhere. From like deciding on loans to the massive background systems, keeping everything afloat. It really gets you thinking about the implications.
Absolutely. The speed of adoption in financial services is, well, it's pretty staggering. It's changing how decisions get made, how risk is managed, everything.
Which is why we wanted to dive into this today. One of you sent us this great article from the Economic Times.
The one about the Reserve Bank of New Zealand report.
Exactly. Now, New Zealand might seem, a bit distant, but their central bank is tackling these exact same huge AI questions that everyone's facing.
That's spot on. Central banks everywhere are trying to figure this out. What does AI really mean for the financial system? And this RBNZ report is it's a really valuable early perspective.
So that's our plan for this deep dive. We're going to unpack this report.
Hmm.
What are the main worries the Reserve Bank has about AI? But also, what are the upsides they see?
Right. What are the key takeaways, and why should you care about what a central bank on the other side of the world is thinking about AI? Because, spoiler, it probably affects you.
Okay, so let's get into the core concerns. The report doesn't mince words, does it? It basically says this rapid AI uptake could be a risk to financial stability.
Yeah, they're quite direct, and they pinpoint specific risks. The first one is maybe the most obvious: errors. Errors in the AI systems.
Right, we've all seen AI mess up. Sometimes it's funny. But in finance,
Yeah.
an error could be, well, catastrophic.
Exactly. Think about loan applications. If an AI starts making bad calls because of, I don't know, biased data or just a bug,
You could unfairly deny people credit. Or the opposite.
or lend too much to risky borrowers. And because the system's so linked up, one problem can spread fast. It just amplifies any existing weaknesses.
Then there's data privacy. Always a good one.
Mhm.
AI needs data, masses of it.
And financial data is about as sensitive as it gets.
So more AI means bigger targets for hackers, more risk of leaks.
Definitely. It's a honeypot for cybercriminals. And beyond just breaches, there are big questions about how this data is used, ethically and within regulations. Is privacy really being protected?
Okay, the third risk they mentioned was market distortions. That one feels a bit more complex. What's the worry there?
Yeah, this one's interesting. It's about herd behavior almost. If loads of different firms are using similar AI trained on similar data.
They might all react the same way to market news.
Precisely. So you could get these sudden amplified market swings, like AI-driven flash crashes or bubbles. It's the interconnectedness causing unintended synchronization.
Okay, wow. And then there's this other major point they raised, which really jumped out at me. The reliance on just a handful of companies providing the AI.
The concentration risk, yes.
It sounds like, I don't know, putting all your financial eggs in just a couple of tech baskets.
That's a good way to put it. If most banks, insurers, investment firms are all using AI from, say, 2 or 3 big tech providers, well, that creates problems.
Like what? Less competition.
That's part of it, yeah. It
Mhm.
could stifle innovation. But the bigger worry is systemic risk. New channels for contagion.
Contagion, you mean like if one provider goes down?
If one of those big AI providers has a major glitch, or maybe worse, gets hit by a serious cyber attack.
It doesn't just affect one bank. It could hit dozens, hundreds simultaneously.
Exactly. It's a ripple effect, but potentially a massive one. It's like a critical piece of infrastructure failing. The impact could be system-wide. That's a huge vulnerability.
Okay, so lots of caution flags being waved by the Reserve Bank here. Makes sense. But it wasn't all doom and gloom, right? They did see potential upsides.
Well, absolutely. It's definitely a balanced perspective. They were clear that AI offers significant potential benefits too.
Like improved productivity. That seems like a given with automation.
For sure. AI can handle routine stuff, streamline processes. It frees up human experts for, the higher level strategic thinking. That means efficiency gains.
Makes sense. And greater modeling accuracy. How does that work?
Well, AI can crunch way more data than humans ever could. It can spot subtle patterns, complex correlations.
With ear to better financial models, better predictions.
Potentially, yes. More sophisticated, more accurate models for everything from economic forecasting to pricing complex derivative, that means more informed decisions.
And they mentioned enhanced risk assessment too, so AI could actually help manage some of these risks.
That's the idea. By analyzing vast data sets, AI might spot emerging risks, credit risks, market risks, operational risks, much earlier and more accurately than traditional methods, allowing institutions to be more proactive.
Okay, and this one surprised me a bit, given the cyber attack concerns. They also listed strengthened cyber resilience as a benefit. How can it be both a target and a defense?
Yeah, it's that classic double-edged sword scenario. The AI systems themselves are targets, yes, but AI can also power the defense systems.
Ah, okay. So AI security tools could spot threats faster.
Much faster. They can detect anomalies, predict attack vectors, even automate responses to incidents quicker than human teams alone could manage. So AI fighting AI, essentially.
So putting it all together, the Reserve Bank seems to be saying AI is this incredibly potent force. It could drive huge improvements, but it also carries these really serious systemic dangers.
That's a perfect summary. It really highlights the uncertainty. Carrie Watt, the director over there, specifically mentioned the considerable uncertainty about AI's ultimate impact. We're still very much figuring this out.
And that uncertainty explains their approach, right? They're not banning AI, obviously, but they're committing to watching it like a hawk.
Precisely. They're going to monitor the tech itself, track how financial firms are actually using it, and keep tabs on how regulations are evolving globally.
It's about staying informed and ready to act if needed.
Exactly. Making sure the financial system stays resilient, that it can absorb these changes and manage these new types of risk effectively.
Now, obviously, this report is from New Zealand. But it feels like these issues are, well, they're global, aren't they?
Completely. The interconnectedness of global finance means these aren't just New Zealand's problems.
The concentration risk from relying on a few big tech firms, the potential for algorithmic errors to cascade, data security, that's relevant everywhere.
Absolutely. Regulators and financial institutions worldwide are wrestling with these exact same questions. How do we harness the benefits of AI without destabilizing the system?
It really makes you think, doesn't it?
Yeah.
About the financial system you use every day. Are these conversations happening? Is there enough focus on both the innovation and the risks?
It's a critical balance, and maybe that brings us back to you listening. When you hear about AI in finance, what strikes you as the most important thing to watch, given both the promise and the peril the Reserve Bank highlighted?
So just to wrap up, the key message from the Reserve Bank of New Zealand seems clear. AI in finance. Huge potential, definitely. Better efficiency, smarter risk management. But also some pretty significant risks, lurking errors, privacy breaches, weird market behavior, and this big reliance on just a few players.
Which all points towards the need for, real vigilance, careful monitoring, thoughtful regulation as we go.
So the final thought maybe is this. Faced with these massive potential rewards and these very real dangers, what are the absolute crucial questions? What should regulators, banks, tech companies, and, frankly, all of us be asking about AI's future role in finance?
Yeah, how do we actually strike that right balance? How do we innovate responsibly while keeping the whole system safe and stable?
Yeah.
That's the big question going forward. Definitely something to ponder.